Vietnam is a country that's becoming one of the most dynamic and reliable destinations for international expansion. Global Horizons Consulting chose Vietnam because of its remarkable recovery after COVID-19, its consistent government leadership, and growing reputation as Asia's next major manufacturing hub. The country's strategic location, right in the center of key supply routes, makes it ideal for companies looking to strengthen or diversify their global operations. Vietnam's young and educated workforce continues to attract foreign investors, while its partnerships with the United States and focus on green growth and technology align with today's global business priorities. Our company's goal is to explain why Vietnam is not only a smart investment now, but a sustainable one for the future. The Socialist Republic of Vietnam, or Vietnam as most of the Western world knows it, is located in Southeast Asia. Bordered by China to the north, Laos and Cambodia to the west, and the East Sea and South China Sea to the east and southeast, Vietnam covers an area of roughly 331,000 square kilometers, or approximately 128,000 square miles, with 3,200 square kilometers of coastline. To put that in perspective, the state of Montana covers approximately 380,000 square kilometers, or 147,000 square miles. The capital city of Hanoi is located on the Red River with an estimated 8.4 million people residing in the metro area. The largest city is their commercial and economic hub, Ho Chi Minh City, aka Saigon, with 10 million residents. Other major cities include Da Nang, which is central Vietnam. It's a port and IT hub. Hai Phong, which is a northern industrial port. Can Tho, which is a major city in the Mekong Delta, and Hue, which is a historic former imperial capital. The population is roughly 100 million people, with a density of approximately 849 people per square mile. The official language is Vietnamese, with other minority languages spoken by the 53 recognized minority groups. However, English is the most widely taught foreign language, which is increasingly common among urban centers and tourist destinations. They have a literacy rate of approximately 95%. The Vietnamese also practice a mixture of Buddhism, Catholicism, folk and ancestor worship, Protestantism, Cao Day, and Islam. Vietnam's climate includes tropical in the south and humid subtropical in the north. They have distinct wet and dry seasons and have a high risk of typhoons between June and November, not dissimilar to how the eastern United States deals with hurricane season among the same time period. Their terrain includes mountains and highlands that dominate the north and central interior, and then coastal lowlands and deltas along with fertile plains. The highest point is Phan Xipang, which is 3,147 meters above sea level and located in the northwest region. Environmental risks include flooding, typhoons, drought, salinization in the Mekong Delta due to sea level rise. Vietnam is a geographically diverse, rapidly developing nation that bridges the Pacific trade corridor. The Vietnamese flag is deeply symbolic of the nation's history and political identity. Historically, Vietnam adopted ceremonial colors and symbols influenced by China. Emperors often used yellow banners, the imperial color of the China's Qing dynasty, and red was used to represent what they called the South. After World War II, when the Communist Party proclaimed the Democratic Republic of Vietnam, on September 29, 1945, the country officially adopted a red flag with a central yellow star. Meanwhile, during the division between the North and South, the Republic of Vietnam in the South used a yellow flag with 3 horizontal red stripes, and the Viet Cong used a variant with red over light blue and a central star. With the defeat of the Southern forces in 1975 and reunification in 1976, the red flag with the yellow star became the national flag of the United Socialist Republic of Vietnam. The 5 points of the star represent the 5 social groups' unity of the Revolutionary Front: workers, peasants, intellectuals, youth, and soldiers. Turning to the national emblem from Vietnam Online, the national emblem was first adopted in 1955 and was adapted to represent the reunification of Vietnam after 1976. It's circular with a red background and a large yellow star at the top, representing the leadership of the Communist Party and the unity of the people. Flanking the star are two rice sheaves, symbolizing the central role of agriculture in Vietnamese life. At its base is a gear/cogwheel representing industry and modern development. And below all of this is the inscription that says Socialist Republic of Vietnam in yellow, signifying the nation's political system. The emblem visually combines agriculture, industry, and political unity, which are the core pillars of their state identity. COVID-19, Vietnam's economy rebounded strongly due to its resilient manufacturing sector and a surge in exports, particularly in electronics and textiles. In 2020, Vietnam's GDP grew by 2.9%, a sharp slowdown in comparison to post-pandemic with the typical growth rate of 6 to 7%. However, the recovery faced challenges such as inflation, global supply chain disruptions, and a slowdown in global demand affecting key export markets. The pandemic caused tourism to drop by 80% in 2020 due to them closing their borders to visitors, suspending large gatherings, and requiring quarantine for all overseas arrivals. Manufacturing, particularly textiles and electronics, faced staffing shortages, which also led to cutting off and temporarily shutting down product lines. Vietnam's post-pandemic recovery has been marked by strong economic growth, driven by robust exports, foreign investment, and the reopening of tourism. For example, the export growth has shot up exponentially post-pandemic. By 2023, it had increased to 5.05%. And just a year later, in 2024, the economy expanded even further to 7.09%. Let's take a look at the country's manufacturing sector, especially in electronics. Those have started booming again with the country's partnering with electronics giants such as Samsung and Intel. Now, the government has also implemented supportive fiscal and monetary policies to help boost domestic demand and stabilize the economy. They opened tourism back up, which also has helped the aid of post-pandemic recovery. Despite global uncertainties, Vietnam has remained one of Southeast Asia's most dynamic recovering economies. So let's take a look at some regional conflicts. The South China Sea dispute continues to impact Vietnam's security and foreign policy, as tensions with China over maritime claims threaten regional stability and its fishing and energy interests. Meanwhile, the Russia-Ukraine war has also indirectly affected Vietnam through rising energy prices, disrupted trade, and shifts in global geopolitical alignments. Vietnam has maintained a neutral stance, balancing strategic partnerships while prioritizing national interests. Pandemic, the Vietnamese government focused on getting the economy back on track by supporting businesses, investing in infrastructure, and attracting more foreign investment. They promote domestic and international tourism post-pandemic through campaigns and international collaboration. It's also pushing for digital innovation and greener growth to build a more sustainable future. The adaptation of e-commerce is growing, as many restaurants and stores have adapted to online strategies to get people to buy goods, especially during COVID. Now, on a global stage, Vietnam is carefully balancing its relationships to protect its interests while staying open to cooperation. And the government issued a relief procedure for those affected by COVID-19 and plans on encouraging and stimulating businesses by supporting business sectors. Next, we'll start looking at some key social, political, and cultural factors that will present opportunities and challenges for a U.S. company to expand operations into Vietnam. Vietnam has a young and skilled workforce that supports manufacturing and IT. The average age of the workers are 32 years old with a strong STEM focus. They're hardworking, they have flexible labor, prioritizing job security. The expanding middle class presents a significant market opportunity. However, the English language proficiency remains a challenge in some areas beyond the major urban centers. The government maintains political stability. With a one-party government, it ensures consistency. They promote foreign investment through tax incentives, breaks for high-tech and export projects. Nevertheless, the administrative procedures may be a little bit sluggish. We all know bureaucracy, and the approval process can be lengthy, which underscores the significance of cultivating relationships with officials. Now, building those relationships with officials will be crucial to expansion. Another critical factor is cultural comprehension. Commerce depends on trust and interpersonal relationships. Respect the hierarchy, steer clear of public disputes, and adjust to local traditions to achieve success. Vietnam presents opportunities in manufacturing and market growth. Success depends on cultural awareness, bureaucracy navigation, and strong local partnerships. So let's talk advantages. Vietnam is quickly becoming one of Asia's fastest growing investment destinations. Foreign direct investment, or FDI, refers to outside companies investing capital into local businesses and projects. This reached $18.39 billion in the first 5 months of 2025, with $8.9 billion being dispersed. Now, according to Vietnam Economic News, this is the highest 5-month performance in 5 years. This also showcases a strong investor confidence in Vietnam's economy. Alongside this, Vietnam's GDP, or gross domestic product, measures the total value of all goods and services produced in the country. Their GDP is outpacing most countries in the region. The economy expanded 7.9% in 2025 Q2, and the forecasts for the full year range from 8.3 to 8.5%. Putting that into perspective, according to the International Monetary Fund, the United States GDP growth for 2025 is projected to only be 1.9%. Vietnam's rapid expansion presents a growth opportunity that far exceeds what companies could expect from domestic U.S. operations. Another major strength lies in trade performance. According to Vietnam export data, electronics exports alone brought in $126.5 billion in 2024, with phones, semiconductors, and integrated circuits leading the way. This positions Vietnam as a financial and trade hub in Asia. For U.S. companies, entering this market means leveraging strong trade infrastructure, faster expansion into Asia, and reduced operating costs compared to the United States. Vietnam's rapid FDI growth underscores strong investor confidence, making it an ideal destination for future U.S. market expansion. Vietnam has also strengthened its international partnerships, particularly with the United States. In 2023, the two nations elevated their relationship to a comprehensive strategic partnership, which is the highest level of diplomatic and economic cooperation. This upgrade signals long-term stability and stronger ties, which reduces uncertainty for American investors. The results are clear in trade numbers. Bilateral trade surged to $155.2 billion in 2024, with most of this being U.S. imports. This created a $121.8 billion trade deficit for the United States. And while this deficit may sound negative, it highlights Vietnam's growing role as a major supplier to U.S. markets. For U.S. companies expanding into Vietnam, this means positioning themselves within an already thriving supply chain, boosting efficiency and competitiveness. Another key advantage is Vietnam's move towards sustainability. American corporations are already setting the tone in Vietnam. PepsiCo invested $400 million in renewable powered plants, while Lego committed $1 billion to build a clean energy toy factory. Vietnam itself has also launched a national emissions trading scheme and introduced green tax incentives for investment projects. In line with global climate goals, the country has pledged to reach net zero emissions by 2050, showing its long-term commitment to clean growth and sustainable development. Implementing green policies provides our client with a dual advantage: tangible cost savings through incentives and subsidies, and intangible branding benefits from being recognized as an environmentally responsible company. In today's market, aligning with ESG, environmental, social, and governance principles can be as valuable as financial savings, boosting its reputation with customers, investors, and regulators alike. Electronics is the backbone of Vietnam's export economy, accounting for roughly 33% of national exports in 2025. The sector is dominated by global leaders such as Samsung and Intel, who already operate large hubs there. Their presence demonstrates international confidence in Vietnam and creates a cluster of suppliers, manufacturers, and skilled workers that new companies can easily tap into. This clustering effect means United States firms entering Vietnam don't have to start from scratch. They benefit from existing infrastructure, government-backed high-tech parks, and a growing labor pool with specialized technical expertise. Compared to the United States, where labor and infrastructure costs are significantly higher, Vietnam offers a cost-effective but highly capable alternative. Locating its operations in Vietnam provides our client with immediate access to supplier networks and faster time to market for new products. At the same time, it enhances the company's global image by being part of one of Asia's most dynamic, future-ready technology hubs. In short, this isn't only a financial opportunity, but a strategic positioning move. Vietnam's strong FDI inflows, rapid GDP growth, green investment incentives, and thriving electronics ecosystem create compelling reasons for U.S. companies to expand here. The country provides cost advantages, branding opportunities, and access to one of the fastest growing economies in Asia. At the same time, no market is without risks. Trade tensions, dependence on certain export sectors, and regional geopolitical challenges must be considered before committing to expansion. In the next section, we'll examine these risks so that Global Horizons Consulting can provide a balanced and realistic recommendation for our clients' long-term success. Vietnam is usually politically stable, which is good for long-term planning. But it's a one-party state, so policy changes can happen fast. Any business coming in from the United States needs local legal advisors or a joint venture partner to make sure everything is compliant. Corruption still happens, so getting permits or approvals might take extra time or connections. With that being said, Vietnam is a fast-growing economy, which is a good thing for business, but it also means that labor costs are slowly going up. Infrastructure is much better than before, but it's still uneven. Big cities have good ports and good roads. Rural areas, not so much. Currency risk is also real, so we'd have to make sure they plan for exchange rate swings that could cut into profits. Electronics manufacturers are prime targets for cyber attacks, so data protection has to be a priority. Typhoons, floods, and other natural events can also shut down factories or shipping lanes for days. Skilled workers are in demand, so we'd also need good training and pay to keep turnover from hurting our production. As we mentioned before, the South China Sea is a hotspot for geopolitical tension, and any conflicts there could slow shipping or make it more expensive. Even if Vietnam stays peaceful, investors might get cautious if the region heats up, which would then slow our clients' growth. How do you mitigate this risk? You can manage risk by having backup suppliers and shipping routes so you don't get stuck if one port shuts down. Hedging against currency swings will protect profits. Local compliance experts will keep you on the right side of regulations. And good cybersecurity plus strong retention programs will keep your production stable. Based on our research, Vietnam stands out as the most strategic post-pandemic investment destination. Even through global challenges, Vietnam's economy stayed steady and has bounced back fast, growing more than 7% in 2024 and attracting record foreign investment. It's in a great spot geographically, right in the center of Asia's major trade routes, which makes it ideal for manufacturing, exporting, and supply chain growth. The government continues to push policies that support green projects and technology-based industries, giving international companies a lot of room to grow. Vietnam also has a young, hardworking, and educated workforce that's affordable compared to neighboring countries, which is a big advantage for long-term operations. While there are still concerns with regional conflicts or cybersecurity threats, Vietnam has been proactive in handling those through stronger digital systems, diversified trade partnerships, and steady political leadership. Overall, it's a country that combines growth, stability, and opportunity, which makes it a smart choice for expanding international operations.